Hey, what's going on? Jordan Dove here. Today is Monday, November 14th, 2022. Can you believe it? The year is almost over. We're halfway through the fourth quarter of 2022. And in about 12 minutes from right now, you are going to know more about the real estate market than 99% of the United States. Okay? And something I wanted to share with you was a little bit of love. I hope you're doing okay. If you're feeling a little down, remember that you are loved. There are others who love you, and you should love yourself. Just remember that you are special today. It's on my cup, okay? Ooh, that's hot. All right. Let's get into this week's Market Pulse update, where we're going to discuss what happened last week in the economy. We're going to talk about the weekly national housing market update, which is very important to you and myself. We're going to review some economic notes. We're going to take a peek at the Treasury bond yields. We've been following those. We're going to give you this week's predictions and our Federal Reserve watch on where we expect overnight Fed rates to be at the next three FOMC meetings. So let's get right into our review of last week. Stocks spike on an inflation surprise as Wall Street traders got so excited over way better than expected CPI inflation. That's Consumer Price Index. That's a Fed's favorite measuring tool of how they measure inflation. And that sent all three major stock indexes to monumental gains for the week. I think they were the biggest since June. But let's consider the last time you remember one of these experts being correct on what the expectations were. They're expecting inflation to be X%, and it's always more or less. These guys are never right. They're never right. So they're going to spin it to make it sound like it's a great thing. Yeah, 7.1% inflation. That's a great thing. It came in low than what we thought, but then it comes in higher than what they thought, and it's just a big old clown show. But I want to follow the data of those in authority who actually make the right predictions. Don't you? Anyways, the October CPI fell from September's 8.2% pace to 7.7. Sorry, I just said 7.1, but it was 7.7%. That's the smallest yearly increase since January. Core CPI, which excludes food and energy, fell from 6.7% to 6.3%, so it seemed like inflation was finally heading in the right direction. And if that's the case, that might compel the Fed to take a less aggressive approach to the rate hikes it's been doing to fight that inflation, which just sent the University of Michigan consumer sentiment down again in November. The week ended up with the Dow Jones Industrial Average up 4.1%, the S&P up 5.9%, and the NASDAQ had a huge gain of 8.1%. But considering that the inflation-hating bonds did well after the CPI surprise, the 30-year UMBS 5.5% up $2.05, huge gain to over $100, $100.22. But the national average 30-year fixed mortgage rate edged up slightly in Freddie Mac's primary mortgage market survey. But guess what? The 10-year yield cratered last week. It's up a little bit today. It cratered. We'll talk about those yields here in just a minute, but we are going to see some rate declines from that. We were seeing a 5.99 interest rate for someone with excellent credit with 20% down. That's above an 800 credit score. Not everybody has that, but we did see rates start to come down. This could be temporary. I don't know. I think rates will continue to rise, but we did see a dip in rates. So some home buyers who were sitting on the sidelines may have taken advantage of that opportunity, just like we saw at the end of July when rates dipped from 6 to 5.5. All right. Now, we've had some big reports come up in the national housing segment as the National Association of Realtors reports home price growth hit single digits in most markets, falling from 14% in quarter 2 to below 9% in quarter 3. The median existing single-family home price was up just 8.6% from the year before. The Mortgage Bankers Association weekly survey showed demand for purchase mortgages actually rose a tick, which was a good thing. This was the first gain for purchase applications in 7 weeks, though they're still down from 1 year ago. And there was key findings in the weekly housing trends report published by Realtor.com that showed the median listing price grew 12% over the last year. The typical asking price for sale homes continues continues to exceed last year's level by double digits, hitting a 44th week at a double-digit pace. However, the pace of growth shrank again. The typical price of a home for sale on Realtor.com was $425,000, which was down from the summer's peak of $450,000. Another measure of sellers putting homes on market is the new listings. Those were down again, dropping 13% from 1 year ago. This marks the 17th week of year-over-year declines in the number of new listings coming up for sale. This week's decline matched last week's, but still means fewer new choices for home shoppers in the market. However, active inventory continued to grow, increasing 40% above 1 year ago, and this is the third week of a more notable step up in inventory gains after rough stability since July. Finding a good recap of recent inventory trends in the Housing Trends view from mid-October as active inventory climbs sharply from its early year low. Monthly data from October shows that for the first time, inventory has surpassed what was available for the comparable month in 2020. The National Association of Home Builders says quarter 3 saw a spike in active home buyers as 59% of prospective buyers went from the planning stages of home buying and became fully engaged in the buying process, which is up from 46% in quarter 1. A little did you know that Realtor.com in the report reported that homes spent 6 more days on the market compared to last year. Plus, for a third week in a row, active inventory kept growing and is now up 40% from a year ago. And we all know that markets swing up and they swing down. And I have to ask you, are you prepared to make the most of this downturn market? Did you know 90% of millionaires are created through real estate? And we've laid out this upcoming opportunity in our playbook, and I wanted to know, are you on the list? We lay it all out for you. Get it at jordandove.substack.com. Enter your email address and get this quality information that could change you and your family's life. All right, so let's get into the economic notes segment of this Market Pulse update. The NAR chief economist, which is the National Association of Realtors, he predicts there's a strong rebound going to happen in 2024. Lawrence Yun said home prices will rise 1% and sales will dip 7% next year before recovering in 2024. In contrast to a Fannie Mae forecast last month that predicted prices falling last year. Again, back to what I said, these guys never predict correctly, so we will see what happens. The International Monetary Fund, or the IMF, says slowing global economic growth is increasingly evident as high-frequency data shows. Global economic growth prospects are confronting a unique mix of headwinds, including from Russia's invasion of Ukraine, interest rate increases to contain inflation, and lingering pandemic effects such as China's lockdowns and the disruptions that had on the supply chain. In turn, the latest World Economic Outlook, which was released last month in October, lowered the global growth forecast for next year to 2.7%, and they expect countries accounting for more than 1/3 of the global output to contract during part of this year or next. Fed Vice Chair Brainard said it may soon be appropriate to move to slower pace of rate hikes. She indicated today that the central bank could soon slow the pace of its interest rate increases. She said, I quote, "I think it will probably be appropriate soon to move to a slower pace of rate increases," she told Bloomberg News in a live interview. However, this doesn't mean that the Fed will stop raising rates, but it at least will come off a pace that has seen 4 consecutive 75 basis point increases, which has been unprecedented. It's an unprecedented pattern since the central bank started issuing short-term rates to set monetary policy in 1990. And speaking of the Fed, let's forecast the Federal Reserve policy changes in the coming months. With last week's inflation slowdown, the Fed is expected to do a 0.5% rate hike in December, then 0.25% bumps in February and March. Wall Street currently sees a 100% probability of a 50 basis points rate hike at the December 14th Federal Open Market Committee meeting. So when we say FOMAC, that's what it means. It's the Federal Open Market Committee, as well as a 100% probability of quarter point bump after the February 1st FOMAC meeting. Now, the third upcoming meeting will be held March 22nd, 2023, and there is currently an 82.8% consensus of another quarter bump hike to the Fed's rates. Now, we've been watching those crazy inverted bond yield curves and keeping you updated on those. 30-year fixed mortgage rates closely follow the 10-year Treasury bond yield. And typically when these yields are inverted, meaning a lower term rate such as a 2-year has a higher percentage rate in return than a longer term rate such as, say, a 10-year or a 30-year, that is an inversion, and it's a strong signal that the economy is headed in the wrong direction. The 30-year is down 22.5 basis points from last week's reading and is currently sitting at 4.066%. The 10-year is lower than the 30, so they are not inverted, and that is sitting at 3.878%, which is down 33.1 basis points from last week's reading. The 5-year is at 4.007%, which is down 38.6 basis points. And the 2-year, which is inverted and higher than the 5, 10, and 30, is currently at 4.412%, which is down 31.2 basis points from last week's reading last Monday. Our Southern Nevada housing market update, which includes Las Vegas, North Las Vegas, Henderson, Clark County, Nevada, and Nye County, where Pahrump resides, that's going to be released every Wednesday on this channel and also sent out via email. So make sure you are subscribed to the channel if you like this kind of information and you find it helpful, and hit that like button for me. I would appreciate it. Every Monday we send out a newsletter report with all of this data. It is beautiful data. It's absolutely beautiful, and it's absolutely free, and it's emailed each Monday, and I want you to have it. If you want this data and other important real estate information to your inbox every Monday, it's very easy. Just go to jordandove.substack.com and enter your email address, and you will get this market report plus other important information each week directly to your inbox, so you can keep your finger on the pulse and know more about this market than 99% of the company. I'm going to keep you guys updated. I want to keep myself educated so that way I can better serve my clients by really knowing what I'm doing. Okay? Now let's get into this week's predictions on housing and the economy, and they are that October housing starts and building permits are forecast to be off a bit, which means down, as well as October existing home sales. Now the PPI, the producer price index, which is wholesale, should show wholesale inflation up for October, which is not good. But retail sales are expected to be up, which would be a good marker for the economy. Now, the only issue I have with these reports is the credit report that came out last week that the United States consumers are $1.1 trillion in unsecured credit debt, which is an all-time high, and rates are moving higher on this type of credit, on this unsecured debt. So their payments are going to get higher. They're going to knock out less principal. People keep spending on credit, which I think is directly correlated to the retail sales reports. Okay, so we're going to keep a close eye on that, man. If you guys can get your credit card debt down, because there's going to be opportunities, please keep that credit clean if you can. I understand emergencies happen, and that's what I personally have credit for, is those unforeseen emergencies or circumstances that may come. Try to use it a little bit. Pay it off in full if you can. This is not financial advice. Now, in light of Veterans Day, we're going to finish up with our tip of the week. But first, I wanted to thank from the very bottom of my heart our brave veterans who serve our country for our freedoms that we enjoy today. And I understand that society is changing. It's pretty soft, and it's unfortunate, but we have worked, and our team have worked with dozens of veterans and their families, and their strength and their perseverance in this changing world should be recognized, because I know them and they are true American patriots. So make sure you thank a vet the next time you see one. And a great benefit that is available to most service members if they served the proper amount of time is the VA loan, which makes homes for the brave achievable. And those who are eligible for VA loans are active duty personnel, veterans, members of the reserves and the National Guard, eligible spouses, and it could be used by previous and first-time homebuyers. So once you satisfy that mortgage, you can use your VA loan again. The program can be used to purchase a home or a VA-approved condo or townhome. It can also be used to build a home and making home improvements. Some of the benefits of a VA home loan is that there are options for no down payment with better terms and better interest rates with limited closing costs. And home ownership, I believe, it's still the American dream. And one way we can honor and thank our veterans is to ensure that they have the best information about the benefits of VA home loans. So if you know a veteran that myself and my team can help, please send me their contact information. My contact information is in every description of this video that is posted on this channel. Thank you guys for checking in the blog. You now know more than 99% of the people in this country about the real estate and economic climate. So thank you so much for being here. Make sure to subscribe if you're not already. Like and share this video with somebody who may find this information helpful and useful if they are in the processes of thinking of investing in real estate, buying real estate, selling real estate. Hopefully this information will help guide them to make a better informed decision. And I would also love to help represent you or your friends or your family. So please consider me if the conversation comes up about buying or selling real estate. We have a network all around the country and all around the world, and we can help your friends and family no matter where they are with professionals that we trust, that I trust, that also have their finger on the pulse. Make sure you guys come in Wednesday for the Las Vegas market update. And until then, take care. Ciao. Be well. God bless and love you all.